Let's return now to our top story this morning, the political fallout over BHP Billiton's delayed expansion plans for the Olympic Dam in South Australia. For more, I'm joined live from Canberra by the CEO of the Australian Minerals Council, Mitch Hooke. Mitch Hooke, thank you for joining us on the program. Is the opposition overstating the impact of the carbon tax and the mining tax on the Olympic Dam expansion, particularly when they didn't specifically say, given the opportunity, they didn't specifically say that those were factors in the decision?
G'day, Jeremy. I don't talk about BHP Billiton's operations. I never talk about any individual companies, but I can certainly talk about Australia Inc. And what I can tell you is that our cost structure here in Australia is getting very close to being twice that of comparable operations offshore, both in terms of our operating costs and our capital costs. That's a new project. It's been driven by labour and energy, transportation and construction costs. We've got declining productivity, and we've got an increasing reputation as being an unattractive place to do business on account of sovereign risk as well. So you put the three together and you've got an environment that is increasingly challenging for Australia and leaves us vulnerable to the competition from emerging economies who are resource rich, places that Australians would barely regard as being competitors to Australia.
Is, though, the sovereign risk being overstated by the opposition?
Well, again, I'm not a commentator on what the opposition says, but what I can tell you is that sovereign risk, in other words, the risk associated with the government policies, has been deteriorating significantly through the course of the rather divisive debates. First of all, in terms of workplace relations, and then it moved into the super mining tax. Then it moved into carbon pricing and carbon tax. These are all areas that investors look at with a jaundiced eye when it's heading in the wrong direction. And we essentially have not really made the progress of economic reforms that we need to build on the 3 decades of reforms we had through the Hooke, Keating and Howard Costello governments that stood us in such good stead to withstand those external shocks of the global financial crisis and the dot bomb and the Asian financial crisis. We've been straddling this bipolar global economy pretty well. The developed economies have been struggling, Europe, the United States and others, and the emerging economies have been growing. Well, we've straddled that pretty well, but as the others catch up in terms of supply, they play that game of economic catch-up, they're going to outstrip our position to compete. What has changed in the mining boom is not the demand fundamentals, they're still there. And they'll continue probably for another decade or two. What has changed is the extent to which supply has come on and emerging competitors have come on. That's causing a deterioration in commodity prices. Those who've got high cost structures will find themselves underwater. And when the cost structures are both operating and capital, you're seeing the kind of decisions that we're seeing where companies are reviewing, deferring, or simply knocking off project expectations.
Where do these domestic concerns, these domestic pressures you talk about, where do they sit in comparison to the international pressures we're seeing? The troubles in Europe, the softening of China and the softening commodity prices?
Well, they all figure in the demand side. But as I said, you essentially got industrialising and urbanising Asia and increasingly Latin America and increasingly Africa. These economies are going to continue going through the cycle of demanding minerals and energy for some time. And so they'll be volatile, and a lot of that volatility will be coming out of what's happening in Europe and what's happening in America, and whether or not the consumer products are going to be as much of a demand in those economies. So you're going to see demand on a trend, but it'll be volatile. That means that prices are going to ease and be as volatile. But on the trend side of prices, as supply comes up, prices are going to come off, and that's really where the pressure is at. We're seeing much more competition for supply to those burgeoning markets. We're not as well positioned as we were back in 2006. Some 2/3 of our coal operations were below the global cost averages. Now it's the other way around. Similarly, a lot of our gold projects will be underwater if prices come off significantly. We've got a lot of base metals, nickel, copper. They are all struggling.
Iron ore is only to do with the dollar as well, though, isn't it? It's very much to do with the strong dollar as well.
Yeah, but the strong dollar is not only on account of the fact that we're a commodities currency. It's also on account of the fact that, as you mentioned, Europe and America, those economies are struggling. So our dollar relative to theirs is strong. But the other thing that people don't actually talk about is that you have inflationary pressures, interest rate pressures, upward pressures on the dollar when you have speed limits to growth here in Australia, whether it's skills, whether it's capital, whether it's the export infrastructure costs. So if you've got an economy that's operating at full capacity and you can't grow the economy, you get those kind of inflationary pressures which feed into interest rates from the Reserve Bank, which feeds into the exchange rate. And the other one is our fiscal position. If you're running a budget surplus, you don't have the requirement to borrow money offshore. But if you're running a budget deficit, you're in fiscal deficit, and structurally so. You're borrowing an awful lot of money offshore to service that debt. That puts upward pressure on the Australian dollar. So the Australian dollar is actually tracking a lot higher than it needs to be. Think through the first few years of the boom. The dollar was running, what, 80 cents as we went through the first few years of the boom up to 2008, 2009? It's increased markedly to where it is now, not just because of our strength in minerals commodities, but because of those other factors I was referring to.
Mitch Hooke, you must have countenanced the possibility that this time next year, Tony Abbott may very well be the Prime Minister. He's vowing to repeal the carbon tax, he's vowing to repeal the mining tax. Would that be enough? These are his key platforms. Would that be enough to fix some of these structural problems that we're seeing in the mining sector?
It's a long haul. I mean, when you talk structural, you're basically saying these deficits are part of the furniture. And it means that you've got to have a policy platform that essentially picks up what we were doing for the last 3 decades that stood Australia in such good stead. At the moment, we've got economic reform inertia. In some places, we're still backsliding. The regressiveness of our workplace arrangements back to an era past where there is a much greater legitimisation for third-party intervention, almost assuming a management prerogative in our businesses, which is compromising the direct relationship between employers and employees that serve the minerals industry so well. These are things that need to be corrected. I'm not suggesting for one moment that we pull out the safety net. We never advocated pulling out the safety net. That ought to be there. But equally, you can't just be reinforcing one agent or one instrument of workplace arrangements being collective bargaining. There has to be the opportunity for workers, employees and employers to get that direct relationship. So that's a very important part of the equation, but also regulation and skills. When I say regulation, I'm talking more about project approvals. The delays in project approvals cost an awful lot of money. It doesn't mean you have to diminish standards, environmental and social standards. It just means you have to be better at what we're doing. And then you come to innovation, research and development, and the growth of all of the factors that feed into improving our productivity. So we're going to turn the ship around, and it's a bit of hackneyed phrase, but this is about turning around the Titanic, and it's going to take a lot more than just picking up on some of those points that you made, some of the bad policy issues. In other words, the mining tax is not necessary for Australians to be sharing in the benefits of the boom. They already are. The carbon tax is just a churn of redistribution. We can get a better arrangement for pricing carbon and reducing greenhouse gas emissions. All of those things factor into the equation of driving costs and destroying value on the back end of the projects.
All right, Mitch Hooke, we're out of time, but thank you for talking to us.
You're welcome.